Hi everyone. The first problem we're going to work through in chapter 6 is problem 6-1b. You have the algorithmic version that you'll complete as part of your homework for this week. What we're preparing in all three of the problems are schedule of cost of goods sold. Each problem uses the perpetual method of inventory. So remember, that means that after each sale, we record the cost of the sale and the cost of the inventory. And we're going to start with the FIFO method, which is first in, first out. So the assumption here is that the first units that we've purchased are going to be the first units that we sell, and our ending inventory is going to be made up of our newest inventory purchases. If you're looking at the schedule here, you'll notice there's three columns. We have a column for purchases where we've got quantity, unit cost, and total cost. Cost of goods sold, quantity, unit cost, and total cost. And then this is what our inventory is: quantity, unit cost, and total cost. So we're going to go through each of the transactions for our company here. It says the beginning inventory at Dunn Company and data on purchases and sales for a 3-month period ending June 30th are as follows. You can find this problem on Cengage. It's called Practice Problems Chapter 6 Not Graded. So you can print these up, or you can work along on your computer while you watch this video. So the first thing that they tell us is that on April 3rd, in inventory, we have 25 units. The cost was $1,200 per unit for a total of $30,000. So we're just going to enter that in here. We're going to put the date. The problem told us it's April 3rd. This is units that we have on hand. So we have 25 units. That's our quantity. Each of those units cost $1,200. And so the total cost, 25 times 12, is $30,000. And I'll try to stay in the lines here as I work through these. So that just told us what we had in beginning inventory. The second date where we have something, they tell us that we've purchased 75 units at $1,240 each for a total of $93,000. So here, again, we're going to enter our date. The date is April 8th. And we're going to look under the purchase column, and we're going to put that we purchased 75 units. Each of those units cost $1,240. And the total amount of that purchase was $93,000. So it's at this point that you're going to start to see layers in our inventory, which allows us to use the FIFO and the LIFO method. So in our layers, our first layer of inventory is 25 units that cost $1,200 each for a total of $30,000. And then we have 75 units that cost $1,240 each for a total of $93,000. And remember, when we're doing a first in, first out method, we're saying that these 25 units will be the first items that we sell before we sell any of these 75 units. All right, so that comes into play here on the 11th. It says on April 11th, we sold 40 units. We sold them for $2,000 each for a total of $80,000. We aren't going to record the sale here on this schedule. Instead, we're going to record the cost of the sale, and we're also going to record what's left over in inventory. So we know that the sale is on 4/11. And we had a total of 40 units that we sold. Under the FIFO method, the first units we assume we're going to sell are the 25 units at $1,200 each. So we're going to put that 25 units were sold at $1,200 each for a total of $30,000. And then the remaining 15 units, so 25 and 40 equals 50, came out of the second layer of inventory that cost $1,240 each for a total of $18,600. So that's the cost of that sale. And what we have left over then is we've sold all of these 25 units, and we've sold 15 of this 75. So we now have 60 units left over at a cost of $1,240 each for a total of, let me find my notes here, $74,400. Is that right, calculator person? All right. So that's how we're going to keep track of this as we go. So the next item that we have is on April 30th. We have another sale of 30 units that we sold for $2,000 each. So again, on 430, we only have this layer left. So we know that all 30 of our units cost $1,240. So that is a total of $37,200. And then what we have left over is 30 units at $1,240 for $37,200. And it's important to point out that this is a cost flow assumption. So we're assuming this is the order that items are being sold, and it may differ from the actual flow of costs. All right, so the next item that we have up here is our May 8th purchase. I'm going to put the date in there. And so on May 8th, we purchased 60 units. Each unit had a cost of $1,260 for a total of $75,600. So we're going to put our 60 units here at a cost per unit of $1,260 for a total of $75,600. And again, I'm going to have two layers of inventory. I'm going to have the 30 units that cost $1,240 each for a total of $37,200. And I'm going to have the 60 units that are $1,260 for $75,600. So we're about halfway through now with the problems. So now that we're on May 10th, we've got our date there, and we've sold 50 units. We sell them again at $2,000 a piece for $100,000. We have to calculate out which 50 units we sold. With first in, first out, we always start with our oldest inventory. So the assumption is that we sold the 30 units that cost $1,240 for $37,200, and that we sold 20 units at $1,260 each for a total of $25,200. And that, of course, leaves us with 40 units that cost $1,260 each for a total of $50,400. And of course, you know, all your scanner purchases, every time you scan items in a regular system, a computerized system, all this is done automatically. But for situations where we might see the grid go down or where you have to do things manually as an auditor, you need to know how to trace everything through these systems. All right, our next transaction's on May 19th. It's another sale. We sold 20 units. We've only got the one layer of inventory. So let me get the right date. On May 19th, we sold 20 units. $1,260 each. We know that comes to $25,200 because we calculated that above. And we've got 20 units remaining at $1,260 for $25,200. All right. So here we are on May 28th. On May 28th, we purchased 80 units at a cost of $1,260 each for $100,800 total. So we're just going to put that in here. We've got our 80 units that we purchased for $1,260 for a total of $100,800. And then again, we're just going to carry down the inventory that we had on hand on May 19th. And then we're going to bring over the new purchase, the new inventory items. We're almost there. We just have to get through June. On June 1st, On June 5th, we sold 40 units. So we're going to have this here on June 5th. We sold 40 units. So we've got that into 2 rows. So we've got the 20 units at $1,260 that were $25,200. And I think I forgot to put a line in here. So that's why I've got it scrunched up there. So, and then I had another 20 units that I sold that came out of the second layer of items that cost $1,260 for $25,200. So all of this layer sold. We've sold 20 of this. This leaves us with 60 left at a cost of $1,260 each for $75,600. On 6/16, we had another sale of 25 units. So on 6/16, of course, we're just going to record 25 units sold, $1,260. 25 times $1,260 is $31,500. 60 units minus 25 is 35 units at $1,260 for a total of $44,100. Is that correct, Max?
Yes.
Okay. All right. On 6/21, we had a purchase of 35 units that cost us $1,264 each. This is going to be our final purchase for this problem. So 6/21, that's where we're at there. We purchased 35 units at a cost of $1,264 each for a total of $44,240. So now in inventory, we have 35 units that cost $1,260 each for $44,100. 35 units at $1,264 for $44,240. And then our final transaction was a sale on the 28th. We sold 44 units. So of those on 6/28, we sold 44 units. So we're going to sell all 35 of the ones that cost us $1,260 each for $44,100. And then another 9, which will give us our 44 units. So another 9 from the 1,264 for a total of 11,376. And so then what we have in ending inventory is 26 units that cost $1,264 at a total of $32,864. So, and then on the bottom line where they asked for the balances on June 30th, I'm going to do this here, type in balances. This will already be on your form here. But the first thing is if we look for the balance of ending inventory, our balance in ending inventory is the 26 units at $1,264 each of $32,864. So this is going to be our ending inventory. And remember, we report that as an asset on the balance sheet. Look, it's just like class. I'm going all the way to the bottom of the board here. Trying not to get on my wall. And then if I need total cost of goods sold for the period, which is part of what the problem's asking, I'm going to total up all of these columns here. The 30,000 plus 18,600 plus 37,200 plus 37,200 plus 25,200 plus 25,200 plus 25,200 plus 25,200, lots of 25,200s, plus 31,500, 44,100, $11,376 for a total of $310,776. And remember, this is cost of goods sold. on the income statement. So I'm going to pause this video right now for a second. Okay, so we finished the first requirement, which is to record the inventory purchases and cost of goods sold data in the perpetual inventory record, similar to the one in Exhibit 3. For number 2, they want us to determine total sales and the total cost of goods sold for the period and journalize the entries in the sales and cost of goods sold accounts. Assume that all sales were on account. If an amount box does not require an entry, leave blank. So the first thing that we need to do is we need to figure out what total sales are. We had the sale on April 11th, on 30th, April 10th, and April 19th. Those units were all sold for a purchase price of $2,000. So we're going to calculate out total sales. So we had a sale on April 11th that was 40 units at a total of $2,000 per unit, which equaled $80,000. We had a sale on 4/30 that was 30 units at $2,000 for a total of $60,000 in sales. We had a sale on May 10th of 50 units at $2,000, which equaled $100,000. And then we also had a sale on May 19th of 20 units at $2,000 each for $40,000. And then we've got 3 sales in June at an increased selling price. So on June 5th, we sold 25 units on June 5th, we sold 40 units. Sorry about that. We had 40 units that we sold for $2,250 for a total of $90,000. We had a sale on June 16th. That's where those 25 units are at $2,250 for a total of $56,250. And then finally, we had a sale on 6/28 of 44 units at $2,250. We're a total of $99,000. And if we add all of those up, we get $525,250. Bonus planning a hit. The sales are going to be the same in the other 2 problems we do, so you don't have to recalculate them now when we get there. All right, so now they want us to do the journal entry to record the sale. So remember, we're going to do this. They give us a date for that? No. So we're going to record the sale. So we're going to debit accounts receivable. Remember, they told us to assume that they were all on accounts, $525,250. We're going to credit sales, $525,250. So remember, we're using perpetual inventory, so we also have to do the cost of goods sold entry below that. We've already calculated out our cost of goods sold over here on our schedule of cost of goods sold. It's $310,776. So we're going to have our debit to cost of goods sold for $310,776, and we're going to debit credit inventory to get those items out of inventory for $310,776. So that's part 2 of the problem. In 3, they want us to determine the gross profit from the sale. So remember, that's sales minus our cost of goods sold equals gross profit. So we know that our sales are $525,250. We're going to subtract our cost of goods sold of $310,776, which is going to give us gross profit of $32,800. No, that's not right. What's my gross profit calculator, person? 525,250 minus 310,776.
$214,474.
So 214,474. Is that correct?
Yep.
All right. Thank you very much.
474.
Oh, and just like class, I made a mistake and I had a diligent student point that out. Can you guys tell that's 474? Yeah. All right. Thank you. Thank you, Max. He's helping with my calculations on this. Number 4 wants us to determine the cost of ending inventory. We already did that. That's listed on our schedule. So that's the $32,864. That's the amount that we have in ending inventory. And then based upon the preceding data, would we expect the ending inventory using the last in, first out method to be higher or lower? When we're dealing with the FIFO, the first items purchased are the first items sold. So our ending inventory is made up of our higher cost goods. FIFO is the exact opposite of that. So we would expect our inventory to be lower under LIFO. And that takes care of that problem.